Okay, guys, welcome to another lecture. Today's lecture will be on trading earnings season. I want to first of all welcome my friends from China, from Meiju Shiji. Apologize if I pronounced that wrong, but welcome from people from Meiju Shiji. And today we're going to talk about how we trade gaps in here, specifically earnings gaps. And we're coming into typically it happen every quarter in March, end of March, June, the end of September going into October, and of course December. The end of December, that quarter end, the gaps come out in January, the actual earnings. Feel free to ask any questions when you have them. And we'll go through each gap. We'll go through each slide one at a time. So guys, why? I'm going to ask for some participation. So the more people participate, the better. For the people who've traded gaps before in earnings seasons, why are we often overwhelmed during earnings season when we're trying to trade these gaps? What are some of the reasons that we're overwhelmed? Anybody have any thoughts on that? There are many gaps out there. Thank Mariano. There are many gaps out there. You're absolutely right, Mariano. There are many gaps out there. There's too many choices, Scott says. Everyone's reporting results. So absolutely, you guys got nailed the first one right there. There are just too many choices. Right now, earnings season always starts. Guys, if you ever want to know, when does earnings season start? Earnings season always starts, Alcoa, symbol AA, Apple. Alcoa typically is the first real bellwether company that comes out with earnings here in the United States. And that came out last week. And that kind of starts earnings season. Everyone always watches for that one, and then we know earnings season started. For whatever reason, they're always the first ones. There's other companies that come out, but that's the one that really marks the beginning of earnings season. So if you ever want to know, Alcoa AA always marks it. That was last week. So today's the second week of earnings season. Really, we don't really get a full kick in until later this week, next week, when we'll start getting like 30, 40, 50 companies every morning and night coming out with earnings. And that's when it gets really crazy. So there's lots of choices. That's number one. So what happens when there are lots of choices? Why is that a problem when there's so many choices? What's the problem when the earnings come out? Why is that bad to have too many choices? Choices are good, right? Any thoughts on that? Well, yep, Mariano. Yeah, need a method of Mariano says you have to be more selective. You need a method of prioritizing and narrowing. Excuse me. And you're absolutely right. Creates a lot of noise. When there's too many choices, it creates lots of noise, and you get information overload. There's just too much. And so when you have too many choices, you get all these different things coming out, information overload, then what happens? What happens if you're trying to trade? Bob says trading style is a factor. What happens when you're trying to trade earnings with all this? What does this make you do? What does this cause when you have all these choices and all this information? What do? Paralysis. Scott's absolutely right, paralysis. And what that means basically is you don't know what to focus on. You just get paralyzed, and you don't know where to focus. So it's really important to realize that earnings season can be a great time where you can make some nice money, but you have to realize these pitfalls that are possible. So that being said, how do we fix it? How do we fix it, guys? How do we fix it so So we're able to trade earnings seasons a little bit more easily. Any thoughts? Have a plan. Scott's right on it. Absolutely. Have a plan for earnings season, guys. And what does that mean, have a plan for earnings season? Pick one specific earnings. Now, earnings season, guys, when you have earnings coming out, it's going to be good news and bad news. Now, I don't trade news per se. If a company comes out with good news, I don't really care what the news is. Why would that be, guys? Why don't I care if the company has good earnings or bad earnings? Why don't I care about that? Anybody got any thoughts there? Anybody? Why is the news not that important to me? It can be important to you, but for me specifically, I'm not really care what the news says. We don't know if it's good news or bad news. Jose says because we trade based on patterns. Andrew says follow the money and not the news. I like that. I like that. I like that comment. Scott says because it's reaction to news, it counts. That's true. And Al says also we don't know it's already been. We don't know if it's already been priced into the stock. The reason I don't follow news, guys, is because I've seen companies with great earnings gap up, and stocks with great earnings just get pummeled and go down. So it's not only earnings that are important, but expectations. You can have great earnings, but if the expectations if they didn't meet expectations, even though they were great earnings, it might not go up. Or maybe sometimes they don't meet expectations, and because there was so much bad news figured in, they still go up. So sometimes good news will gap up, sometimes good news will gap down, and same thing with bad news. So it's better not trying to decipher that way. The best thing for me and what we try to do here is we try to focus. Someone already had said already, Jose, because we base on patterns. We base our trades based on patterns. So we focus on one specific type of gap, which is either a pro gap, and we'll go into that in a minute, guys, for people who don't know. Pro gap we call a novice gap, or what we call a continuation gap. And so what I'd recommend is figure out if you want to. Now you don't have to trade gaps at all. Again, if this isn't for you, I'm just explaining how you would trade gaps if you want to. So if you want to trade gaps, first identify what type of gap you want to trade, whether it's a pro gap, a novice gap, or a continuation gap, and then only focus on the best of that particular type of gap. So if it's a pro gap you're going to focus on, pick maybe 3 or 4 of the best longs that you can find based on based on what you've seen in the past, and pick the 4 best shorts based on what you've seen in the past. And just focus on those, and that will really get rid of a lot of the clutter and the noise. Whoops. I went from 3 to 4 or 5. Okay, I missed a slide there. There's a slide missing there. Okay, and the fourth thing is define what the gap is in your trading plan. Be very specifically how you're going to trade that gap. And we'll get into that a little bit more. And the fifth thing is to have some kind of rating system to rate your gap. Have a gap rating system. Now I have a gap rating system how to rate pro gaps, but if you could have a gap rating system for novice gaps and continuation gaps too. So have a system that you use, and you base that on previous patterns that you've seen before and what's worked and what's not, to figure out what you want to play. Does anybody have any questions so far? How do you rate the gaps, Al said. Well, that's another lecture, and we can talk about that. We can talk about that in an upcoming lecture. If you guys want to do another lecture, we can do one in a week or two, and we can talk about how to rate pro gaps. I have a rating system for pro gaps, and we can go over that if you'd like. But the main thing is to figure out what you want to do as far as a gap that you want to play, whether it's pro, novice, or continuation. Narrow on a few longs and a few shorts that you want to play. Be very specific what that gap is supposed to look like, and then have a way to rate that gap so you know what makes one pro gap better than the other. Fernando, like to hear about the gap rating system? Okay, great. So if we have a good response here, what we'll do is in 2 weeks we'll have another, not next Wednesday, but the following Wednesday. If people are interested, we'll do another lecture Wednesday after next on rating gaps, if you guys would like to do that. And anybody, a little side note, guys, anybody that has any ideas for future topics for Wednesday lectures, if I get ideas, I'll have more lectures. I used to have them every Wednesday, but then we weren't getting a lot of people coming in. But more people coming in, more people interested, we can have lectures more often. I just like to have nice participation like we're having today. A lot of people are asking questions or contributing, and that's all I want to see. So if we have that, we can do it more often. But we can do one in 2 weeks on how to rate gaps. But if you guys have a suggestion on a future lecture topic that you might like to hear about, especially any of new people and friends from China that are trying to learn, maybe even if it's more of a beginner thing, that's fine as well. You can email me at rick@tradingwings.com. And let me put this in the room. And put in the subject matter Wednesday lecture topic idea. And then tell me what you what you'd like the topic to be, and what you'd like me to cover. And if it sounds reasonable and I can figure something out, we'll have a lecture on it, and I'll try to make something up. Try to get some slides or try to get something up, and we'll go over that. So rick@tradingwings.com, guys. If you want to send me in a subject matter lecture topic idea, Wednesday lecture topic idea, and then just put what that idea is and what you'd like me to cover. So we could possibly do that in the future. The last thing that I'd like to mention to you guys on this particular thing is only trade one or limited entries. So once you have your a gap that you want to trade, only take one, maybe two types of entries that you would take. There's a difference between a strategy and entry. A strategy is defining the type of gap that you're taking, what it looks like. The entry is the entry. That's totally different. Define what it is. Jose, for example, likes to play 60-minute bases, and he likes to look for a 5-minute buy or sell setup. That's very specific. He knows what he wants to do, and he's looking for a bigger, broader pattern, which is a 60-minute base, and then he's looking for an entry on the 5-minute setup. So have a entry, one or two entries on if you're going to trade these gaps that you'd like to take, and stick with those. Now, why am I only saying one or two entries, guys? Why do I say only take one or two entries, one or two type of entries? You can take more than that, of course, but why am I saying only try to limit to one or two? Any thoughts on that? Why would I say that? Anybody? And again, guys, this is only an outline of what I'm recommending. There's many different ways to trade. I always say there's many different. Trading's a lot like fishing. There's many different ways to fish. There's many different ways to trade. Al might be impatient. He likes to fish with a net and throw his net in the water and catch lots of fish at once. Scott might like the thrill of that fish striking on the line, and he wants to throw his pole in the water and catch one at a time and try to reel it in and fight the fish. Anna, being up north in Minnesota, she's used to being cold. She might like to freeze her butt off and sit in on a block of ice and drill a hole in the ice and ice fish. and the same thing goes for trading. There's many different ways to trade. I don't have all the ways to trade. I'm just giving you some guidelines that you might want to take to improve your results. And smoke cigars, Anna. So the reason I'm saying, so Al says the reason I say only take 1 or 2 entries is to limit mistakes, prevent mistakes. That could be one reason, but there's a bigger reason than that. Why am I saying only take 1 or 2 entries? Only, once you figure out your strategy you want to take, only look to define it to one or a couple of entries. Why am I saying that? Any other thoughts besides prevent mistakes? Scott might know this one. Ah, yep, Scott got it again. I knew Scott would know. So you're focused in something where you can quickly measure results. Guys, if you play all different strategies and 10 different entries, how are you going to ever measure which results are better than the others? It'll be very hard to measure results. And one of the most important things in trading is not only to take the trades, but to review after market and measure results and see how they done on that trade. So if you take the same entry every time, you'll quickly find out if that's a good entry to take or how it can be better. Versus, if you're doing a different entry every time, it'll be impossible to be able to track that. So that's why I'm saying limit your entries so you can get really specialized and good in that particular entry. So hopefully that makes sense. Yep, and collect separate results for categorizing them. Absolutely. Does anyone have any questions at this point? Went over some good stuff here. Remington, any of your people possibly have any questions? Does it make sense to them so far? I'll wait for a moment to see if on the responses. Okay, so Remington's not saying anything, so I'm assuming nobody has any questions then so far. We'll go ahead and move on. So other helpful hints, guys, when trading earnings season. Remember to block out other gaps and don't get distracted. If you're going to trade pro gaps, only trade pro gaps. If you're going to trade novice gaps, only trade novice gaps until you get consistently profitable. Try to narrow it down. The more focused you are in one particular area, the easier it is, especially when there's so many things coming out. Also, trade only the setups that you're in your trading plan, guys. If it's not in your trading plan, if you don't have a written trading plan on how to trade them. Okay, am I going too fast, Remington? Okay. Just send me a message if I need to repeat anything or going fast, and if they have any questions, please let me know. Okay. So remember to block out other gaps and don't get distracted, and trade only the setups that are in your trading plan. And I should put this out. A lot of people might not know what TP means, so I should have put this out. It's trading plan. I'll take TP out. A lot of people won't know that, possibly. There we go. Yeah, Anna's thinking about something else when she's sitting on the ice blocks. And all that coldness, and water. Okay, how do we know we did the right thing at the end of the day, guys? And the way we know that is to review all your entries after the market. As we had already talked about, it's really important not only to take the trades, but you have to review. This goes not only for trading gas, but trading anything. Review your entries and to make sure that's in your trading plan. And if it wasn't, and also, besides reviewing just your entries, you can also, if there was no way that you could get in, based on your particular entry, maybe go back and see how you could get in using a different entry, and then start collecting stats on that. So you would do that to review, to learn what entries worked, to learn what didn't work. And you want to ask yourself, did you follow your plan? So review all your entries after the market to learn what worked, to learn what didn't work. Also, did you follow your plan? Why is it important, guys, to follow your plan, your trading plan? Why is that important? What will that do? What will that help do if you follow your trading plan? Well, it might be hard. Well, yeah, the fear thing is the big thing. I think people are more fearful of losing than they're more fearful of pain than pleasure. It's a Tony Robbins thing, which means they're more fearful of losing than winning. So it's good to increase your confidence. So if you know you stuck to your trading plan, you trade exactly like it was, it's going to increase your confidence. So if you did a trade, guys, and you know, as one of the guys in here, his plan right now is to take 1R, one risk unit. So if you risk $100, once he's up 1R, he takes half of his risk off. And once he's up 2Rs, he takes the other half off. If the stock goes to 10Rs after he gets out, he can't be mad because that's what his plan is right now. But if he sees enough of those trades that he keeps leaving all that money on the table, he's probably going to switch his trading plan, his management around. So that's why it's important to see if you followed your plan, see if it worked, see how maybe you could have managed it better, and that's why that's so important. And so as I just mentioned, look at stocks that performed well and look at stocks that didn't. And the other thing is not only look at the stocks that you traded, but also look at stocks that maybe you didn't trade that performed really well, and how you could have gotten in, or why you didn't get in, how you may be into that stock in the future. These are all things that you can do to get better quicker as a trader and perfect becoming consistently profitable. And basically, this is the bulk of what I wanted to go over today as far as trading earnings season. It's important to have a plan, to be specific of what you want to actually trade, to narrow that down into a few longs and a few shorts, and to wait for those patterns and before you take the trade. And once you see the trade, you take the pattern. If you don't take them, if you don't see the trade, if your pattern doesn't come up, you just don't trade it. So if you do that, guys, that'll really eliminate a lot of the noise. So when to give you an idea, when earnings season isn't up, I'm looking at trading all different kinds of things. But when earnings season comes up, I'm looking to trade one thing, and that's pro gaps. That's all I'm looking to trade, and that's it, because there's so many things out there. And then even if there's a lot of pro gaps, then I've got to narrow it even further down to the best of the best. And that's why that's what you need to do too. When I first started out, what would happen would be there'd be so many things going on. I'd write all these different ones down, and then then there'd be so many things triggering at once. I'd end up having so much information overload. I'd end up not trading anything at all. Or the other thing would happen. What's the other thing happens, guys, when you keep missing opportunities? What happens after a while? You're in something, you see all these opportunities, you keep missing it, then what happens? What's the next thing that classic happens, guys? You miss a bunch of opportunities that you should have taken. What happens then? Any thoughts? This is just trading psychology. You get impatient, you take the wrong trade. Absolutely, Anna. Absolutely. You get impatient, you end up taking the wrong thing. You jump in ones you shouldn't. Absolutely. So I hope this was helpful, guys, to give you just a little bit of a blueprint. I know it might be a little basic for some of you guys. I know some of you guys have heard this before. The last thing I just say is, especially for the people that aren't members right now, just watch for upcoming lectures. We'll have them on Wednesdays at 12 o'clock. Feel free to stay with us the rest of the day and trade with us. I'm not on the mic too much after 1 o'clock, But if people have questions, I will come back on, or I will answer them through text on the message screen here. And for people who are not members, our trading room is only $99 per month. But if you want to work out a 6 or 12-month deal, we do give some specials for longer term. But most trading rooms are anywhere from $150 to $300 a month, so $99 a month is still a pretty good deal. And then lastly, if you're not consistently profitable, consider staying with us. We have great trades in here. We have some great traders in here, and you can learn a lot from being in this room. So I hope this was helpful, guys, and you learned a little bit. For people who haven't heard this before, for people who did, hopefully it was helpful to hear it again. Okay, Bob. Now what I'm going to do now is, for anybody who can stick around, if you'd like, is I will go over some trades that we did mention and call out in the room today. And you guys are welcome to stick around for anyone who would like to hear that. And just one second, I need to turn off the recording here. Just one second, guys. And we'll start